How's it going, everyone? This is Israel, your loan officer down here in Southern California, and welcome to Israel's Info. Now, before we get started, I want to let you guys know about our new changes to this channel. Starting this week, we'll start sharing educational videos on Mondays and Fridays for each week, and then we'll be covering real estate and mortgage loan topics. And then 3 times per month, I will share the mortgage interest rates as well as the market conditions. And if there's any important breaking news, I'll make sure to keep you guys informed. Okay, enough said. Let's start. So in the world of mortgage loans, there are many acronyms that get tossed around at any given point. Today, we're going to be talking about one of them, Welcome PMI, also known as mortgage insurance. You and I will get to know all about this famous yet not so well understood acronym. We'll cover such things as what is it, why do I need it, the many misconceptions behind it, and most importantly, is there any way I can get rid of it? Ever had that annoying cousin that would always follow you around wherever you go? Well, that's what PMI is to your mortgage loan. It would always follow you along just as long as you have an FHA loan. And even if you decide to ditch them by going and using a conventional loan, it might not be as easy, especially if you're not putting more than 20% down as your down payment. Okay, so point number 1. So first of all, mortgage insurance is something that absolutely does not protect you in any way, even though it might sound a little bit misleading with the mortgage insurance. Think of it as the Geico for banks. The only difference is that instead of it protecting you, it actually is meant to protect the lender, aka bank, in case you stop making your payments and a foreclosure happens. And to add insult to injury, guess who gets to pay for the insurance? Yep, you guessed it right, you. Now, before we start bashing our good friend PMI, we have to understand why this is. You see, banks are all about risk, and the less they have to take, the better, especially if it comes down to their own money. Ching ching. So when you apply for a loan and the bank sees that you're not putting too much skin on the game, they actually see you as a higher risk. So their only response is to cover their backs. And thus the annoying cousin gets introduced to you, well, to your loan. So now that we have a better idea what PMI is and why we need it, we'll talk about the misconceptions and differences that can apply to different borrowers and the loan program they're applying for, such as an FHA or a conventional loan. Such is the case with the uncle or aunt we all come to love, you know the one. They're always showing off on their last and greatest savings they got from Costco or Black Friday. And so when you tell them how much you paid for your Samsung Smart TV during the Amazon Prime Day event, they'll say something like, "Wait, what? You paid how much?" "Well, I only paid this much, and it actually came with an extra 2 years worth of Costco insurance. Not sure why you pay that much." So think of PMI as a box of chocolates. You never know what you're going to get, as every single one of us is a different and unique flavor. And so not everyone is going to qualify with the same credit scores and or down payment amounts. And just these two components alone can give you a whole different flavor depending on what type of loan you'll be applying for with the lender. Now, if I were to simplify PMI with the type of loan you're considering getting, I would break them into the following 2 camps: FHA here and conventional on this other side. FHA. Now, if you're putting less than 20% down, it doesn't matter what type of credit score you have. You could have a 700 or a 640. Your PMI is going to be 0.85 across the board. And the other one is stays on for the life of the loan, as it never goes away unless you refinance into a conventional loan and your equity is more than 20%. Now, there is a small difference if you're putting 10% down, but I'll cover that later in the video. Now, the conventional, if you're putting less than 20% down payment, then your PMI would vary widely depending on the dollar amount of your down payment plus the type of FICO score that you have. And it will go away depending on the percentage of your down payment and what your current LTV is at the time. LTV, loan to value. That's another video for another occasion. And finally, how can I get rid of it? Now, under the FHA loan, there are only 3 options for you. Or unless you put down 10% as part of your down payment, then the 4th option would apply to you as well. Number 1, if you were lucky enough to have gotten an FHA loan before June of 2013, then once you have 20% worth of equity, it would automatically fall off your loan. Also, if you sell your home and pay off your balance, well, that's logical. The other one is if you refinance into a conventional loan. And the 4th option, this is for the people that put in 10%. Automatically on the 11th year, that PMI would fall off automatically from your loan. Now, for conventional loans, the box of chocolates has a wide range of options. Again, this will all depend on your original down payment and FICO score, as well as the amount of equity at any given time. Now, the $1 million question is always, well, Israel, why would I do an FHA loan if I'm going to have this pesky mortgage insurance for the life of my loan? And the answer is yes, you're right. Why would you? Why would I? Now, take a look at the following stats from no other than Fannie Mae. As you can see, the percentage of people refinancing are quite high. And if you thought those numbers were high, now with this new Zoom economy that's beginning to take place all across the country, you'll see more migration of people moving in and out of different states. And in turn, you can see how a program such as our good old friend FHA, even though it comes with a pesky cousin, it continues to help tons of home buyers that not necessarily don't have a high credit score or 20% down for their down payment stashed under their pillows. Okay, and saving the best for last, this article points the following: FHA lending to take larger role. The FHA could also reduce its monthly insurance premiums under the new leadership. Now, if this is the case, then it could possibly be that our pesky cousin, also known as the PMI, could not be as bad after all. Time will tell. Hope this information was helpful. If you have any questions or comments, please feel free to place them down below, or you can always give me a call at 661-388-7667. And for all those thinking about refinancing or buying, same number applies. And lastly, for our homeowners thinking about putting your house on the market, we got a top-notch team of professional realtors ready to answer all your questions. All you got to do is just give us a call at 661-388-7667. Thanks for watching. May God bless you. May God bless our great nation. And I'll see you guys on the next video. Take care. Bye-bye.